Top 7 mistakes new investors make, and how to avoid them. Hey, everybody. Welcome back to the channel. Did you know more than 60% of new investors lose money in their first year? Yeah, it's true, not because they were unlucky. It's because they're repeating the same noob mistakes over and over again. I've been there, I swear. I used to invest all my dough in one stock because my friend told me it was going to the moon. Spoiler alert, it didn't. Today we're covering the top 7 mistakes new investors make, and how not to do them, so you won't have to learn the hard way like I did. Stay tuned because by the end of today's video, you'll be armed with the knowledge to invest smart and keep your money where it should be in your pocket. Let's get into it. Mistake number 1. Not doing your homework. Alright, mistake number 1. Not doing your homework. I understand that investing can seem daunting. Stocks, crypto, ETFs. It's like learning a whole new vocabulary. But diving in headfirst is like baking a cake with no recipe. You may get something that's edible, or you may ignite your kitchen. Here's an anecdote. My friend Dave, a real individual, I swear, came across this hot crypto token on social media. He threw $500 on it without even knowing what the business did. 2 weeks later? Poof, gone. It turned out it was completely a scam. How to avoid doing this? Take a few minutes to do your research. Research the company by searching for it online, review their financials if it's a publicly traded stock, or read the white paper if it's a cryptocurrency. You don't need a PhD, just 20 minutes can save you a small fortune. Begin small, and only put your money into what you know. Got it? Awesome, let's continue. Mistake number 2. Putting all your eggs in one basket. Mistake number 2. Putting all your eggs in one basket. This is diversification 101, folks. If you put all of your money in one stock or one cryptocurrency coin, you're wagering your whole life on one horse. And if that horse falls? Ouch. I had a friend who bet the farm on a tech stock because tech is the future. Then the company didn't make earnings, the stock fell 40%, and they were having ramen for months. True story. How to keep it from happening? Spread your funds across stocks, bonds, possibly some real estate, or even a smidge of crypto if you're feeling adventurous. Easy rule? Invest no more than 10% of your money in any one thing. That way, if one investment tanks, you've still got others propping you up. Diversify, diversify, diversify. Mistake number 3. Chasing hype. Number 3. Chasing hype. Oh man, this one's a killer. How many times have you seen someone on TikTok or Twitter yelling, "This stock's about to 10x"? It's tempting, right? FOMO kicks in, and suddenly, you're buying at the peak. I got taken in once on a penny stock. Everyone told me it was the next big thing. I invested at $2, it went to $3, I was a genius. Then it plummeted to 10 cents. Hype is like sugar, it tastes good until the crash. How to steer clear of this? Block out the noise. Hold to a plan founded on your research, not what's popular. If you have to chase something, allocate a small fund money budget, e.g., 5% of your portfolio, so you don't spend it all on a Reddit rumor. Patience trumps panic every time. Mistake number 4. Panic selling. Mistake 4. Panic selling. Imagine this. You purchase a share, it falls 10%, your heart's racing, and you sell it to cut your losses. Then, a week later, it's back 20%. Familiar, isn't it? That's panic selling. I did this with a good company once. It fell 15% in one day due to some miscellaneous news. I panicked and sold, only to see it recover. I lost $200 for nothing. How to avoid this? Zoom out. Markets fluctuate, it's normal. If you've done your homework and believe in the investment, hold tight. Set a stop loss if you're nervous, like 10–15% below your buy price, but don't just dump it because of a bad day. Emotions are the enemy here. Mistake number 5. Ignoring fees. Number 5. Ignoring fees. This one sneaks up on you. Trading apps make it so easy to buy and sell, but those tiny fees? They add up. A $5 commission here, a 1% management fee there, and suddenly, you're losing hundreds without even noticing. I knew somebody who was day trading like mad. He brought in $300 in a month but was charged $250 in fees. Net gain? $50. Not worth it. How to prevent it? Read the fine print. Invest on low-fee sites. Tons are free these days, or commit to long-term investing where you don't trade daily. If you're in a fund, seek those with expense ratios below 0.5%. Each dollar you save is each dollar you keep. Mistake number 6. Trying to time the market. Mistake 6. Trying to time the market. You've heard it, buy low, sell high. Sounds simple, right? Except no one has a crystal ball. Waiting for the perfect moment usually means missing out entirely. I once did this. I waited for a stock to decline, it didn't, and I lost out on a 25% profit. My friend who simply purchased and held on. She's laughing all the way to the bank. How to get around this? Emphasize time in the market rather than timing the market. Dollar cost averaging is your best friend. Invest the same amount every month, regardless of the price. In the long run, it levels out the highs and lows. Believe me, discipline trumps guesswork. Mistake number 7. Not having a plan. Lastly, mistake 7. Not having a plan. Investing without a purpose is like traveling without a map. You may get somewhere interesting, or you may crash. Are you saving for a house? Retirement? A yacht? You need to know. I began investing without knowing what I was looking for. I'd purchase random items, flip them, and ask myself why I wasn't making progress. Then, I decided I wanted $10,000 for a car, and every action made sense. How to steer clear of this? Put your goal and timeline in writing. Short term? Go conservative, such as bonds. Long term? Stocks or index funds. Check in every few months to see if you're on track. A plan keeps you focused, it's that simple. Asterisk, conclusion plus call to action. There you have it, the top 7 blunders new investors make and how you can avoid them like a pro. To sum it up, do your research, diversify, don't fall for the hype, remain calm, keep an eye on those fees, forget about timing the market, and always have a plan. Investing doesn't have to be intimidating, it's about playing smart and staying in the game. If you guys found this useful, click that like button and leave a comment with your worst investing blunder. I'll read them all and subscribe for more investing advice on how to make your money grow. Ring that bell so you don't miss the next one. Thanks, and I'll catch you guys in the next video.